Hello, my dear listeners. In this video today, I will talk about silver. We'll do some technical analysis. I will look into traders' commitment report. I will talk about silver squeeze story, and also I will report what is I discover DeepSeek says about possible silver squeeze. But first, let's listen what Mike Maloney has to say.
I would say I don't know, but sometimes these things take a while, but it is definitely going to happen. And my business partner years later said, you know what they're really asking you, Mike, when they say, when is it going to happen? They're asking you, okay, I don't really want to buy gold and silver right now. I want to stay in the stock market, but could you please pick up the phone and call me the second the hits the fan? So they were always asking when. Well, guess what? To all of those people that were asking when, 1, 2, 3, now!
Okay, so you got your warning. So now let's actually look and analyze what is happening about this silver squeeze. So what I have, okay, I'm gonna use what is DeepSeek told me about. So basically, it says that the average short position on the COMEX is between 80 and 120,000 contracts. Which is, if you multiply by 5,000 ounces, you're going to get the number of ounces. The average during the 2019 was 90,000 contracts. Okay, so the current level of commercial shorts have soared over 120,000 to 150,000, which is represent 150 million ounces of outstanding short interest. The thing you have to know about the COMEX contracts that they can be asked for delivery. So there is a cash. Both contracts are cash settled. But if you short the silver, you're really somebody who stands for delivery could ask for the physical metal. Okay, so non-commercial shorts, 20 to 40 million contracts. That's not really interesting for us. Okay, so conclusion: today's commercial short positions are historically high new level last seen during the 2011 price spike. So the 2011 price spikes, and when the silver went from $17 spot to $49 in 3 months, and I was watching this. Okay, the key factors increasing short squeeze risk. When shorts are forced to buy back contracts rapidly. Okay, concentration of the shorts, a small group of banks and commercial traders, about 4 to 8 entities, hold 40 to 60% of commercial shorts. This concentration fragility is one major player exits. It could trigger a domino effect. Okay, what I think, well, they will probably not do this unless they have to do it. Okay. Declining COMEX inventory. This one, I think it's a major one, because COMEX registered silver inventory of metals available for delivery has fallen to 35 million ounces as of 2024. Probably, maybe it's less today, maybe it's more. I didn't really investigate into that, but with shorts representing 750 million, so that's how maximum could be asked for delivery. Okay, so we have a ratio 20 to 1. Well, it's the high delivery or default risk as physical demand surges. Okay, so macroeconomics. Silver is critical. Solar panel, EV, supply crunch could spark panic buying. Monetary policy, falling interest rates, weakening the dollars, geopolitical risk, retail and institutional sentiment. So Reddit, you have people like, watching the videos that I just present. Why issue squeeze hasn't happened yet? Okay, price suppression tools. That's very interesting. Okay, critics argue banks use derivatives, OTC swaps to offset future shorts, delaying squeeze. Okay, I'm not sure what that is, but it's very interesting. Cash settlements. Most COMEX contracts are cash settles. But what I see, there is a lot of, there is the delivery. You have to watch the deliveries, basically. The deliveries, how much is the deliveries, that's what has the most effect on the price. patterns of the shorts. Commercial traders often roll contracts forward, avoiding forced buyback. Okay, probability of the short squeeze. The likelihood higher than average due to high risk commercial shorts relative to shrinking inventories, physical market tightness, global silver deficit. Okay, macro catalysts, inflation, green energy demand, central bank gold buying, spillover. However, a squeeze requires a trigger such as surge in physical delivery demands, sovereign nations, funds, major bank exiting its short position. JP Morgan, well, that's the last thing I think that will happen if they really have to, unless they decide to manipulate the price upwards for some reason. But I'm not really counting on JP Morgan to help us with the price spike. A coordinated retail institutional buying frenzy like 2021 silver squeeze attempt. So precedents 2011, you see spikes to $49, aiming QE-driven inflation fears. I remember that. Everybody was thinking that the dollar is going down. 2021, Reddit-driven share squeeze briefly pushing prices to $30, but nothing happened after that. Today's setups resemble 2011, but with weaker COMEX inventory and stronger industrial demand. Okay, so we are in a better position to have a 3x. Well, it was from $17 to $49 in 3 months. That's what I remember. Okay, so conclusion: the current COMEX silver shorts position is larger and more precarious than historical average. With physical inventory at critical levels, while a short squeeze isn't guaranteed, the risk is elevated due to structural vulnerability of the paper silver market. Major geopolitical and macroeconomic shocks could initiate rapid covering. So you have to monitor. So let's look. Okay, so I pulled this thing here. I don't know if it's a little bit small, but you can see basically this is a commitment of traders report from March 18. So what we have producer shorts 40,000 contracts, dealer swap 67,600, managed money like mostly long but 13,000 short, and auto reportables 12,000 shorts. So if I do this quickly, well, I actually calculate, I add all the shorts here, 40,067, and there's 25 more, and multiply that, so I get 125,700 about, I rounded numbers, 700 contracts outstanding, which is represented by 5,000 ounces each contract. So 628 million ounces of short position outstanding. It's not more than 150, but it's 125. It's still quite a bit. So that's what we have on short position. Now today we have, okay, so this is the hourly chart of silver. Well, this is, well, it's not really strong trend line because there was not many touches, but we kind of, broke above. If we consolidate here, retest it, and shoot over, I'm actually having a trade, leverage trade, betting that we're gonna push through this high, and there's gonna be some short squeeze this time, like stronger than, because if you look this move here, well, it didn't really hold. Well, actually, if I go, I have to go to daily chart to see that move. Okay, so more long term. So actually I have well, I'm not the expert in the waves, but there is my wave count here. So we have a first push over $34 here, and we have our ABC correction, and well, I'm presuming that we are in a wave 3, which is, I done the Fibonacci extension, and from this top to bottom, or from this bottom to this top, and I get about $38-40, 168 move, okay, from the bottom to here. So that's how I estimate the wave 3 could go, okay, but that's pure speculation, and there's a correction maybe to this high, and another wave 5 wherever. It's hard to say. And we have, okay, so on the downside we have a good support here at $32. Well, this level, I actually suspect during the current situation that if we go on the downside, this level will hold. If we ever test it, maybe like, you know, looking like the buyers should show up here. Okay, so that's gonna be it pretty much for today. Thanks for watching, and please like the video and comment.